Hi everyone, this is Rohit from Lifestyle Mastery, and today I'm excited to have Mila Khrapchenko, who's the co-founder and co-CEO of Ameetee, an AngelList-like platform for traditional banks that provides an opportunity to invest in private companies bypassing PE offices. Welcome to the show, Mila.
Um, Hi everyone. Very thank you for having me here, Rohit.
Yeah,
Uh,
absolutely. Lovely to have you here. And before the call, we were chatting about the experiences, and I think you got a fascinating career. But before we talk about Ameetee, into this world of startups.
how did I come here? Look, before I became co-founder myself, I probably did over 20, 25 investments in startups. And investing in startups also did not come, from the very beginning. Initially, I was investing in public markets. And curiously enough, my first investments were not very typical for, for an ordinary person. Typically, people will start trading in stocks or bonds, but I was a banker. And after I made my first, little bit of money, I already had quite a bit of experience in credit derivatives. So, what fascinated me was restructurings and distressed debt. So, my first investments were in distressed debt. And later on, I started to invest in equities. And then after that, I started to invest in startups, which was probably, quite a few years ago. And I didn't have any intention of investing in startups. I was just doing fine with bonds, distressed debt, equities. But at certain moment in my career, a couple of my friends, one after another, asked to look me into particular investment opportunities they were examining, and I was amazed how fascinating the startups were, first of all. And second, I saw a lot of parallels between distressed debt in terms of uncertainty, in terms of multiple stakeholders, in terms of, there has to be a lot of will and thought in terms of maybe turning around the business or starting and navigating in this difficult complex world. And that is what brought me into startup universe. Later on, I understood that I could be quite helpful to the startups I was investing in myself, because I could bring more investors. I knew finance, so I could help them with, building financial models, or I could give them some useful advice in terms of, which instruments to use, how to present themselves, and so on. And I'm doing this up until this day.
Interesting. I saw that you have worked with Alpha Bank for 18 years, and you were like the head of structured products division over there. Quite a long tenure, especially you look at Gen Zs, they can't stick around in a company for more than a year. But how was the experience building, Alpha Bank over there?
Well, I guess you wouldn't stay at the same employer if you don't like it.
True.
It was a great experience, and there are normally people change jobs because they find out there is a better opportunity. They can develop further, whether professionally or can get better paid. And I was very lucky to stay at the same place and to do gradual career movement. I started as a fixed income analyst. I had very little idea about how to analyze fixed income, whether it's local, cross-border, international securitizations, or anything when I joined. And there I had a great mentor with whom I worked for the whole period of for 18 years. And it probably would be fair to say that he grew up together with me. After being an analyst for a couple of years, I moved on into debt capital markets, or did quite a bit of issuances. Then I did a few securitizations, which was yet an expansion from that. Then I dived into derivatives, then into credit, and then at certain point in time, it turned out that I know really many things, which if you combine them, give sort of unique skill set in the market. And when I'm formally it was named structured products, but in reality it was a complex mix of structured finance, hybrid financing, or we even did commodity prepaid structures for the clients of the bank, mostly cross border.
Cross-border. Okay, got it. Um, yeah. So the thing is, yeah, I mean, you interestingly mentioned about derivatives. So not many people know this, but I started off my career as a stockbroker, and I read about value investing. I was a big fan of Warren Buffett, and he said like derivatives, you should not invest in derivatives. But the funny thing is, derivatives is what I always did, for like futures and calls and puts and all that. But would you advise uh, you know equity traders and investors to invest into derivatives, or would you say to stay away from it?
Rahit, that's a great question. And what I would do is I probably would not advise to invest in derivatives per se.
Yeah.
I still do believe that derivatives they bear certain features that is very hard, not really cannot, that are very hard to replicate by using other instruments. And I'm a big believer in the use of derivatives, or if you have a diversified portfolio of
Mm,
bonds, you can use derivatives as a yield enhancement instrument, for example, or you can use them as a hedge. You do not necessarily need to use options which are complex. Frequently, not every person will probably know how to price them correctly. And if you don't know how to price an instrument, it's really hard to know whether you are buying or selling at the right price. But at the same time, I do believe that the world is populated with
yeah.
derivatives. Like for example, when we invest in startups, we often do so through derivatives. Like for example, a safe agreement, a simple agreement for future equity, is in effect derivative.
Mm,
People barely think about that, or various kinds of convertible notes.
yeah.
They have derivatives embedded in them too. So very often we just do not know that this is a derivative, or we don't think about it that way.
Got it. Got it. Interesting. And you had earlier mentioned that you invested in many startups. So what are the sectors that you had invested in, or you um, yeah, would like to invest
I'm
more in?
generally, trying to be sector agnostic,
Okay.
although I definitely skew towards what I, with my banking career, understand better.
Right.
So I have invested in edtech, for example, in HR tech, in fintech, in travel tech. Um, these are, but at the same time, I occasionally invested in a company which produces hardware, and this is an early stage startup, which, for example, is producing. They have designed and are producing microchips with a neural network that is built into the chip. And to be honest, to understand the whole concept of the product, I just had to call a couple of my friends who are physicists, so they could explain me that this is, physically possible to build such a thing, and there is a chance that this will be a breakthrough product. That was a few years ago.
Got it. Got it. And do you give an advice on how many number of startups should one invest in, so that people are able to diversify their portfolio? Do you have like a number, 20, 30 startups?
I would say that there probably are 20 startups if you invest in early stage
Right.
is not a sufficient number. Maybe 30 plus is more or less, and there it's not exactly about how many.
Right.
The spray and pray approach doesn't seem to work.
Correct.
I mean, when I say doesn't seem, I would rely on there are numerous articles and research papers that examine this fact, and they tend to arrive at somewhat different results.
Mm,
Um, but imagine if you invest in the very early stage startup, the probability of success is probably less than 1%.
yeah.
So 20 definitely seems too small a number unless you're a very experienced VC fund manager.
Correct.
At the same time, yeah, if you invest through angel syndicates where there is some collective form of due diligence or VC funds, then definitely this number could be smaller.
Oh, okay. Okay. Got it. Interesting. And what led you to build Amity? I think the interesting thing is it's a B2B platform, not B2C. But what led you to build that?
Basically, my own desire to invest into some instruments which are in between very early stage startup, where I could come with relatively small check and be able to invest often directly, and their public markets. At certain point after I had invested in early stage startups for a while, I was looking for some investment which will be more balanced in terms of risks versus return. And I tried to, you know, on my own experience, to invest into several late stage companies. And there definitely my check was not sufficient to invest into them directly. So I was looking for different ways how I could do that. And it turned out to be extremely difficult at that point in time to find appropriate investments. And by that time I was already very tired that I had so many startups and I monitored them um, on my own, and I was working simultaneously, so I was looking for some nice mean to do it via my bank or via the brokerage firm where I had an account. And it turned out that such products basically were almost non-existent. So I thought that it would be great indeed to create such a thing that my broker or my bank could have offered me to invest into a late stage company, like for example today, or we could think about investing into OpenAI, for example, or Anthropic or Stripe or some other examples. Um, so I thought that what is needed there? And what is really needed is there is some instrument that banks would more or less universally understand, that their back office could process, that would be divisible between their different clients. And this is a form of securitization on the one hand. On the other hand, the banks need to deliver a certain amount of information. They need to do their own checks, their own due diligence. So they need information, and each such investment is like a mini M&A deal. You need to analyze a lot of information about the company you're offering to your clients. So and what happened after Alpha Bank, I joined together with my one of my current co-founders, a large brokerage firm, and we created such a product for the individual investors. Although they had to be qualified, or in the United States we'll probably use the term accredited, but at the same time they finally got access into this kind of late stage private equity VC backed companies. And that was of a very big success. And when certain time passed, I decided that maybe this is a universal need. Maybe, there are many wealth managers, banks, brokers, family offices who would love to have this securitized form.
Got it. And when it comes to a marketplace like yours, how did you ensure that you were adding the right sort of investors and startups? So what came first? Was it startups, or was it adding those B2B investors?
Oh, yeah, I would guess that this would depend on the market, but the current market we're in
Yeah,
is definitely tough for the companies that raise capital.
true.
It's very tough for early stage investors who are, who invested early or on the way, and they are probably looking for an exit because the IPO market has really been down. There haven't been so many M&As recently, and there indeed almost all the markets were in the red zone. In 2022, in 2023, we saw some, very robust recovery in the equity markets, although, much less so in the VC market, because the VC market typically lags between, let's say, 9 months and maybe 18 months. So they certainly are not in the best shape at the moment. So it's not really hard to find good investments. Um, Not as hard as it was in 2020 or in 2021. Those were really crazy years. Um, so we started with our, onboarding various financial institutions as our partners, and we see it as a first step. But definitely, we welcome not just the startups, we welcome the private equity companies, and there, to be precise, very early stage startups with no traction. For them, Ameetee is probably not the right place to go, because on another front, on another side, we have financial institutions which are relatively conservative. So something um, from round B and onwards is probably a suitable investment for Ameetee because of our client base.
Got it. And before the call, we talked about Israel, and and one of the VCs called Sergey Gribov from Flint Capital, who came on a podcast, and we also discussed, and he had some very interesting points about Israeli startup culture, where he said that lot of, most men and women have to serve 2 years in the military, and that is why they're more mature than Americans. Maybe that is the reason. But why do you think Israel, even though it's such a small country, it is one of the strongest startup ecosystems in the world?
I'm still a little bit outsider here, so I will speak from our, observer
Right,
point of view, from a person who has been living here for a little bit more than 2 years. I see several reasons for that, and they are interrelated. First of all, Israelis, they adore kids,
right,
and the Israeli kids, they are treated in a very special way. So when the kid is young, probably up until, he goes to the middle school, to the seventh grade, the
right,
kids are allowed to do anything. They socialized, everyone supports them. They are a little bit spoiled, maybe, but at the
right,
same time, there is so much love that the kids get, almost everywhere, whether it's their families, or whether it's kindergarten or school. Kids are effectively like, like the kings. They are encouraged to socialize, they are encouraged to play, they are encouraged to express themselves, and they're, very, I haven't seen any crying kid. My kids went to go to school here, and they're, I probably have never seen a crying kid here in Israel. So after that, somehow they shaped their within, secondary and their high school, but at the same time, not too much. And then with all this inner freedom and ability to express themselves, they go to the military service. And there, indeed, almost everyone serves here. That's obligatory, except for certain categories of the citizens. But most of the people will go and serve in the army.
Yeah.
And then another, round of shaping happens. Then there is discipline. There is being a part of the same team, and there at the same time, certain conditions where people are really tested. So after the military, um, you have a combination of this inner freedom which comes from your childhood and their ability to control yourself in a very good way. So it is indeed very often when people serve together, or when they served probably in the same military unit, maybe a different in different years, they will recognize each other. They will treat each other almost like a family member. It's sufficient to one of the first questions Israelis ask each other when they meet: where did you serve?
Interesting.
And then, apart from that, the country is small. Everyone knows everyone, and that creates a very strong bonding when they build something. And because of that, and the level of education is also very high. Very often in the military, people get professional, especially if that's something like cybersecurity. They
Mm.
probably will be educated in the military to a very good deal.
Yeah, yeah. No, I think that is interesting. Especially when it comes to 3D modeling, and you find a lot of Israeli startups. So that was fascinating. Um, Mila, I want to talk about fintech, and also, we talked about revenue-based financing. I went into this rabbit hole of doing a thesis on that. But who do you think is going to win and lose in the next wave of fintech? Is it going to be large companies or startups? What do you think?
I think, typically, who is losing is organizations with their, rigid mindsets
Mm,
and their rigid cultures. And but that's again, that's a very broad answer. Um, who is at risk is traditional financial institutions. Of course, they are. If they don't innovate enough, then they simply face many problems on their way, because the software is obsolete. Very frequently the software consists of different blocks. Some of the blocks were probably coded like 30 years ago,
oh,
and sometimes you cannot even find the programmer who will be able to get into that code. So that's one of the problems. And there another thing, it's very hard to innovate inside large organizations.
oh,
And there, historically, we've seen that there have been many attempts, but after all, it's those who will win is uh, if they are traditional institutions, they need to either open up and create some form of the open architecture for third parties to come in. And they're rather, I like the term ecosystem, but ecosystem will not necessarily apply to financial institutions. Those who can open up their ecosystems to various small innovating companies will ultimately be the winners. And these will not be necessarily financial institutions, because you can imagine a creation of the ecosystem based on the search engines. You can imagine it based on telecom companies. You can imagine them based on on gadget producers. Anything is possible here, but definitely you need to think very very broadly and figure out how to innovate if you're a large financial institutions today.
got it. And yeah, so next topic is obviously about crypto. Because in the last couple of weeks or months, I would say, like, Bitcoin has really gone up. But after what has happened with FTX and all that, so how do you think crypto will be regulated, and what will happen to the crypto industry?
Well, look, crypto has been with us as a reality, as a new reality for quite some time now.
So
And I do agree that there are, different coins, altcoins, Bitcoin, Ethereum. They are really, the champions these days. Um, Again, the regulators are. Um, it's really an interesting time we're living in terms of crypto and digital assets. First of all, the regulators they tend to lag behind all the regulations because of many things. One of the reasons are in crypto market and crypto infrastructure, probably the best minds are concentrated and have been concentrated, whether in terms of engineers or in terms of bankers, financial engineers, and so on. So there were really smart people out there. Not Again, I wouldn't say anything bad about the regulators, but definitely the smartest people are probably more, rather within the crypto industry than within the regulators. And they tend to lag behind because they simply see what is evolving. This doesn't mean that the government or the regulators will not do anything. We are witnessing a very big trend for creation of digital currency. Digital currencies are in many countries, and I wouldn't say that this is altogether good thing or altogether bad thing. It's good thing because digital currency gives us a lot of speed, a lot of efficiency in terms of operations and their day-to-day transactions. It is somehow concerning because it also gives such a government an ability to control almost everything, and this is not necessarily a good thing. But at the same time, I do believe I have a tiny portion of my personal investments are invested in crypto, but I do believe that people will be looking to invest in crypto, not just because ETFs are there, but just because the more uncertainty people feel about the markets, the more uncertainty they feel about the regulation, the more interest they will be expressing towards alternative assets. And if we look at what has been happening to crypto, this is probably a degree of uncertainty and concerns people are expressing. As well as gold, for example, people have been investing in gold, and it also rallied recently.
got it. Yeah, no, absolutely. And no, obviously, I want to talk about AI, especially what has happened with ChatGPT coming on board since 2022. And a lot of people say that they'll lose their jobs. But how do you think AI will change financial services going forward?
I think AI is already changing our financial services.
Right.
Um, and there are, not necessarily are some of these services we definitely are the banking products, but some of them is, for example, KYC.
Hmm.
AI is extremely helpful in KYC. AI can be extremely helpful, or various machine learning or techniques can be extremely valuable if you do some ordinary stuff like scoring system for personal loans or for credit cards. Whenever you have a granular loan portfolio, AI is a perfect instrument. Again, AI is now widely used, or maybe is starting being used in various chatbots. Like, for example, instead of waiting for hours, a response from help desk, the bot can help you, which is another example of usage of AI. In terms of investments, It's again, I think AI is starting being used quite a bit, um, more on the public market side rather than on the private market side. Private market is typically more difficult to
Yeah.
analyze, but whenever you have a constant stream of data in terms of prices, volumes of transactions, or financial data, AI, we have historically known that AI is already very efficient in terms of searching the right information, locating it, analyzing it very quickly, pulling, etc. In terms of VC, there is another interesting thing. I guess more than um, classic machine learning techniques, what could be applicable there, especially for early stage startups, is rather LLM, large language models, where, for example, because you cannot formalize everything, but you can get certain hints, like depending on how the company is hiring people, or for example, what press releases they publish, or what founders speak, or what their competitors show on their websites. So for this, um, LLMs can be a useful tool. I do believe that we're too early in this game to make definitive conclusions, but definitely it's very interesting era we're entering.
Yeah, no, absolutely. And what do you think? Which products will be harder for AI to serve or to disrupt going forward?
What products? I think that there, first of all, the products where we don't have enough data,
Yeah.
not granular ones. Like if we're talking about private equity, or some specific debt transactions, they may be less easy to analyze using AI tool, because simply there is less data, and you need data to make the algorithms work.
Mm, got it. Um, and especially when it comes to AI, how will AI handle the ambiguity of which master to serve? Should they would it serve the consumer and their experience, or the banking industry and their fees and their profit motive?
Oh, that's a good question. I do believe that this is probably
Yeah.
neutral thing, because if the banks, for example, use AI to create a scoring system to analyze the credit worthiness, or to establish a credit limit for a particular client, it will ultimately benefit both banks and their clients, because it will create a very transparent, um, well, maybe not so transparent, but rather predictable mechanism, and at least hopefully very quick one. So after all, everyone will be better off. Um, and again, ethically, it's probably more appropriate to ask this question in relation to large language model. Large language models, they indeed, there it's very hard to get away out of some ethical considerations. But with banking products, I mean, if the products remain more or less as they are, lending, investing, then after all, banks are interested in providing the high quality service, and I do believe that they will use AI exactly for that.
Mm, mm, got it. Uh, and will banks need to own and operate on their own models? Because how will they differentiate if they made on on top of someone else's technology?
Um, I do believe that there are, large banks would probably prefer to have their own models.
Yeah.
Uh, more or less, the way I've seen it in my life are the larger banks.
Right.
They have an ambition, and this is a very human quality. They do prefer to stay in control of
Yeah.
something. That's why they will probably prefer to have the models of their own. Smaller banks really probably will not be able to afford, not necessarily, because after all, we may come to a point where there will be certain types of the models, and there you could probably use very high quality third party models without without any risk or without any material risk.
Got it. Mila, quickly want to do the top three. What's your favorite business book?
What's my favorite business book? Very, I have many.
Okay.
Let me name a couple. One is business, another is less about business. I do love the book Good to Great.
Okay.
Um, and yeah, I do believe it's been written a while ago, but I think what is the big idea is very, very valid. Basically, that book has quite a few ideas. What differentiates, really outstanding companies from simply good ones.
Hmm.
And there another book I truly like, and I do believe it relates to business as well, is The Undoing Project by Michael Lewis. It's more about behavioral stuff. It's the story about of Daniel Kahneman and Amos Tversky.
Okay.
Daniel Kahneman is probably one of the most well-known people in the model world because he completely changed the way we think about the rationality, about the consciousness in decision making, etc., etc. And then doing project is the story of how they probably arrived at this big theory, which created a turning point um, in some of them in behavioral. They created a new discipline, behavioral finance.
Got it. Got it. We'll put that in the show notes. And if you could go back in time when you started working, started building Amity, what is the one thing you would have focused on or done anything differently?
Rahit, I wouldn't change a single thing.
Okay.
And this is probably because I'm getting a bit philosophical here, but there when I start reflecting on the past and think about what I would do differently, that would imply to me feeling regret, or
Yeah.
feeling maybe blame and shame for what was done. And I don't think that this is the right approach, because this doesn't allow you to get away from the patterns that create certain things in life, and we repeatedly are follow the patterns and achieve the same result. So what I would rather say is, do I look back and see certain patterns that limit um, limit how I achieve certain results? Yes, I do. And I do at the same time believe that all the experience that happened before was great. And it's like, teaching a kid to walk. A kid doesn't, feel sorry, or, he doesn't feel what he would do differently. He
Yeah.
simply stands up and walks again.
Nice. Yeah, no, I love that analogy. And what's your favorite online tool? For example, Gmail, Slack, Zoom.
What do I like? I like HubSpot, believe it or not. That's a CRM system, and I do believe that it's very convenient. It allows many things. One of the things which are, they allow, which is very peculiar, um, they allow automatic Telegram messaging,
Yeah. Oh, nice.
which is great, which I didn't find in other CRM systems which are suitable and available for startups. In terms of trading, I'm a big fan of TradingView. TradingView is an information system which you can link to your broker, And they have a lot of technical analysis tools, but they have also, a lot of data, like financials of the companies, etc., etc. And they have almost all the markets. So that's another favorite tool, although it's not related to, to the business.
Yeah, no, absolutely. We'll put that in the show notes. And Mila, what is the best way people can reach out to you and know more about Amity?
I guess they can reach me to me at my email. It's mila at ameetee .io,
Sure.
or they can visit our website.
Correct. We'll put that in the show notes. Mila, thank you so much for taking the time and speaking to us. I really enjoyed my conversation with you.
Thank you for inviting me, Rahid. It was pleasure to talk to you.
Cheers. Thank you.